Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, as we take a look across the board, very flat closes here for all four of the majors, slightly negative as well. So Dow Jones negative, S&P just slightly positive, Russell and the Nasdaq also negative on the day. We did see the crude backing off just a little bit, although that is starting to test the upper extremes of a balance that we've been looking at. We saw gold catch a bid up above the 1220s, try and break out before fading back down below it. And then folks, the bonds here, somewhat sideways action, no real tell from that. So we're going to see all of this on the charts, but as always, we're going to start off with the S&P 500s on the daily charts. And so folks, as we zoom into the S&P 5s, we can tell that there's still very little tell here from the markets. We managed to close just a hair over the 2280s, but really still no directional tell on this. If we zoom into the intraday charts here, there's those 2280s we've been talking about, and you can tell we formed up right at that. And I think what potentially could be on deck here is this morning we've got the non-farm payrolls, right? So Friday morning non-farm payrolls. It's potentially a market moving number here, and it could be that traders are just kind of hanging out, seeing what to do here and what those numbers are looking like. But as I've been mentioning over the last couple of videos, is as we've been kind of churning here and starting to see some little bit of signs of maybe potential tiring of the rally, what we've been doing is we've been putting in a series of higher lows, right? So if for any reason you start to undercut any of these areas, then you immediately got to put the next support level on notice, because if you start to undercut these 2270s, basically it's going to look like the 2280s is where the sellers are located. They're pushing the prices down. If you break through the 2270s, you got to watch to see if there's any buyers here at the 2260s, and if you break through that, then it's like, okay, you're down here at 2230s. And that's, folks, that's the step-by-step process in how markets potentially can start topping, and those are the areas to look for. So instead of relying on people's opinions or the media or anything out there, financial blogs or newsletters, folks, just focus in on price and volume. The charts will tell you everything about the health of the market. All right, let's move over to the Nasdaq here, folks, because we had a couple of heavyweight tech stocks on deck here. So on Thursday morning pre-market, we had the, or I should say after market on Wednesday, we had the Facebook reporting. It did actually lift just for a little bit, tried to break out here intraday before fading down back onto the lows. And I'm also watching Amazon as of Thursday evening. Amazon is off about 30 points. So we talked about how both the Facebook and the Amazon lately have been showing some signs of strength, but Amazon here fading off after hours after that earnings report just came out. I'm seeing bids down at the 803s here on Thursday evening, so we'll have to see how this opens up on Friday morning. Again, those non-farm payrolls potentially could add a bit of a lift to the market. But overall, folks, when we look at the Nasdaq, we have been seeing Nasdaq relative strength, and that seems to be where the bids are coming in. And we'll take a look at some individual equities in just a second, but even though the markets are somewhat listing here at this point, no real direction, kind of in a bit of doldrums, it does not mean that we are missing out on breakouts. In fact, there's a lot of stocks that are breaking out, some of them on volume and some of them because of earnings. But folks, we got to focus in on those breakouts. Let's move on to the commodities here real quick. So as we're talking about the crude, we did pressure those upper levels. You see how it kind of backed off right off of those upper levels. So that's still further evidence that there's some supply up there. There's sellers up there right near the 5450s. That is the place that if we're going to try and break out of, we got to take out those levels, those 5450s. That to us would indicate that the sellers have dried up. There's no more supply or inventory out there. And if the demand stays constant, folks, we know what the equation is, right? Constant demand or increasing demand and less supply means higher prices. That's what drives stocks, commodities, the price of anything out there is supply and demand. Let's move over to the bonds here. Now, as I was mentioning, kind of stuck in a bit of a range here. If we zoom out just a little bit, you can see that there's really no directional tell. But overall, folks, after a big sell-off and after some range-bound action, typically this is a bit of a bearish formation, right? It's kind of like a high handle formation in reverse. Others call that like a bear flag. That would be another term for this. But if you start to undercut, like first early heads up tell would be like these 123.20s. But if you start to really undercut the 123 evens, folks, it might seem that the bonds have some more selling in order here. And then finally, taking a look at the gold here. Gold tried to pop up above those 1220s. I've been watching that, thinking that that might be the level to send it higher. And so far, seeming like a little bit of a false breakout. We'll have to see how this progresses in trade throughout the Friday session and over the weekend and coming into Monday, Tuesday next week. So, folks, that's where we are in the commodities. Now, one of the things I had mentioned is even though the markets are somewhat sideways on the equities front, look at some of the swing trades that we've been taking here in the room, in our live trading room. This is a stock that we hit 2-3 days ago, coming right through the 39.40s, and here it is 3 days later up to 42.83. Folks, that's like an 8-9% gain just in 3 days. Just unbelievable gain. And this is what we talk about, relative strength. So, when you look at this stock leading up into the breakout, right, leading up into this breakout right here, what you have to keep in mind is what did the markets look like at that time? And if we compare it to the markets, you see how the markets are selling off? And if your stock is going sideways during that time and actually trying to break out, that's relative strength. That indicates to us that somebody's trying to acquire this stock, even if the market conditions are somewhat soft. Again, this is our game plan every single day, as we're searching for the best relative strength stocks, breaking out on volume from recognizable chart patterns, and these are the types of plays that you can achieve when you focus in on these types of stocks. Look at this, right over the 39.40s, boom, up to almost tagging the 43s overnight. So breakouts are alive and well. They're still working. Just watch out for those earnings. We're still having some earnings reports out there. And folks, have a great trading day ahead and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.